It's 2024 and we are getting rich AF this year. Let's get this bread. It's money time. But in order for you to actually get this money though, you gotta make sure you understand what's going on with your taxes, because there have been some major updates to the tax code, and per Benjamin Franklin, in life there are only two certainties: death and taxes. Trust me, the government is always gonna come for what's theirs. With tax season right around the corner, we're gonna go over some of those changes and how they affect you. I've been digging into these updates, and let me tell you, it's crucial to understand what's coming our way, so let's dive in. Okay, first and foremost, income tax brackets are shifting upwards, meaning different income thresholds will now fall into various tax brackets. These changes took effect at the start of the year, Jan 1, so you may have already noticed a potential increase in your take-home pay. These changes could also shield more of your income from the IRS and affect how much tax you owe or get refunded. Let's take a look at the changes. To keep it easy, we're gonna look at the tax brackets for just single filers for now. These were the 2023 tax brackets for single filers, and here are the 2024 tax brackets for single filers. As you'll notice, you need to earn more for your dollars to start being taxed at the next taxation level, aka the next tax bracket. This change was implemented to avoid a phenomenon known as bracket creep, which happens when taxpayers are pushed into higher income brackets even though their purchasing power is essentially unchanged due to steeper prices for most goods. What this essentially means is that the IRS has taken note of how much the cost of living has increased and wants to update tax brackets so regular Americans just don't get royally screwed over. If you're making the same amount or even slightly more, but everything in your life costs more, paying the same amount in taxes as you did last year is actually likely a larger percentage of your income. And that's not the IRS's goal. They want their cut, but they don't want you to be so out of money that you really hate them. The IRS makes these changes annually to account for the cost of living, but in times of high inflation, the increases are more significant and impactful for taxpayers. Although inflation has fallen from the highs of 9%, it does still remain higher than both the pre-pandemic average and the Federal Reserve's 2% target. So feel free to think of this change as a little bit of silver lining. Before we get into the second tax code change, I do want to quickly remind everyone to get their copy of Rich AF, my book released December 26th of 2023, and it is chock full of finance tips. Not only am I going to help you ask for more money at your job, I'm going to teach you how to budget, save, and invest step by step. It is a wealth of information, and I can't wait for you guys to read it. Also, there are a few more stops on my book tour happening in February, so check those out in case you haven't already. All you have to do is go to richaf.me to get yourself a copy of the book, preferably signed, or come see me live and in person. Thank you guys so much, and now let's get back to the video. Secondly, a big update this year to the tax code will be how much you can contribute to your retirement accounts. For everyone planning for retirement, it's super important to take note of these changes, even if they seem pretty small. They'll have a big impact on you and your retirement over time, because the more money you can contribute and invest early on, the more compound interest can work for you. First up, let's talk about company-sponsored retirement plans. Things like your 401k or 403b or 457. The limits for these accounts was $22,500 in 2023, $20,500 in 2022, $19,500 in 2021. However, for 2024, that number will rise to $23,000 for individuals under 50 and up to $30,500 for those aged 50 and above. This is increasing to broadly keep up with inflation, and folks over 50 get a bigger limit for catch-up contributions since they're closer to retirement. It's essentially the government's way of saying, hey, if you're in your 50s and not where you want to be retirement saving wise, here's your chance to catch up. As for individual retirement plans not tied to where you work, IRA contribution limits will climb to $7,000 for individuals under 50 and $8,000 for those aged 50 and above. This is up $500 for both scenarios versus 2023. And I know what you're thinking. Psh, what's $500 going to do for me? Turns out, a lot. $500 invested at age 20 over 40 years works out to be a bit over 15 grand by age 60. If you invested in a diversified portfolio of index funds that track the broader market returning 8 to 10% a year, that $500 could make you a lot of money. $500 may not seem like a game-changing amount, but $15,000 could certainly help support you later on. That's a crazy amount of growth that you do not want to miss out on. So if you can, it's important to max out your retirement contributions once you are able to do so financially. Not only do you get an immediate tax break right now, you'll be saving and investing for future you. So these increases in contribution limits are going to majorly benefit you in the long run. Make sure to take advantage of them. And last but not least, the third change to the tax code is going to impact my investy besties, capital gains modifications. This is just a fancy way of saying that there will be changes to how much you're taxed on investments and asset sales. This is important for you to know because it may alter your investment strategy and planning for the future. Capital gains are essentially the profits you made from either investments or property going up in value. And as with everything else, the government wants you to pay a little bit of the money you made investing in stocks, bonds, or real estate to them. As you can see, in 2023, if you earned $44,625 or less investing, you didn't have to pay taxes on that income at all. Any investment gains you got between $44,626 to $492,300, you'd pay 15% on that, and then anything above that, 20%. However, in 2024, these are the new brackets. Essentially, you can earn a little bit more before having to pay more in taxes. Again, this decision was made to help you keep up with inflation, which is just a further testament to how important it is to invest if you don't want your money eaten away by the increased cost of living. These new tax code changes can seem a bit confusing, but in summary, across all of it, basically the IRS is just increasing how much money you can make before you have to pay more due to inflation. In addition to that, they want to encourage you to set more aside for the future because the cost of living is going up, up, up. Now that you have the right info, you should be able to navigate these changes a bit more confidently. It's important to stay up to date on any information about the changes online through regular research, or you could even set up a Google alert. Additionally, if you're still really confused, you can always talk to a CPA or tax expert. A financial planner or tax professional can help set you up for success in 2024. And even though I work in the finance space, I have both. There is no shame in getting help from someone who specializes in dealing with stuff you may not have the time to handle on a day-to-day basis. Beyond that, some of these changes might even see more money headed your way soon. I'll be keeping you updated on important info about your taxes and money, and I encourage you to seek professional advice tailored to your situation. Remember, understanding these changes empowers us to make more informed financial decisions. Thank you so much for tuning in, and be sure to like, follow, and subscribe, and I'll catch you in the next video. See you later, besties.